I'm Sam Brobeck, Assistant Editor of Engage Investor, and I'm here with Shah from Pension Insurance Corporation, winner of Engage Investor's Best De-Risking Provider. Hello, Jay.
Hi, Sam.
2013 is already set to break de-risking records, including the 1.5 billion EMI pension scheme deal that Pension Corporation did. How do you think the rest of the year will go?
Well, we've seen quite a change in the market over the course of 2013. We've seen an improvement in market conditions in terms of scheme funding and the performance of schemes' assets. So we're seeing a number of schemes that thought they were nowhere near affordability levels for a buyout, now seriously considering a buyout. Some schemes, like the EMI pension scheme, are reaching a position where they're within transaction parameters and are now actually going ahead with it. So we've seen much more activity in terms of full buyouts this year than we had last year, and we're seeing much more interest amongst the larger schemes, serious interest in terms of continuing to de-risk using bulk annuities either in a buy-in form or a buyout form.
And what do you think separates Pension Insurance Corporation from the competition?
I think two things. Firstly, these transactions, particularly some of the larger transactions, can be quite complex. They're not standardized processes and they're certainly not standardized products. We treat them as projects. We endeavor to achieve the pension scheme's targets, pension scheme's structural requirements, whether that be the trustees' requirements or the company's requirements. And we believe that's critical, which means that we tend to focus on maybe a smaller number of larger schemes. That's one aspect. The other aspect is that we do take the customer experience after a transaction, and by customers I mean the end member of the pension scheme, the people receiving pensions, very seriously. We make ourselves available to them, and we're open and transparent. Our customer satisfaction levels are some of the best in the industry.
There's been a lot of talk about the end of quantitative easing in the UK and the US. How do you think that will affect prices?
Well, as you know, quantitative easing has been possibly good news for the economy generally, but not so great for pension schemes in that it's depressed long-term interest rates, which has a negative impact on pension scheme funding levels. So we believe a combination of quantitative tightening, in effect, leading to higher longer-term interest rates, together with possibly a positive reaction to that in the equity market and an uptick in the equity markets, overall produces the right circumstances, the right backdrop for more de-risking activity.
Thank you very much.